0% down payment home loan? USDA is a hidden gem mortgage loan program. It allows you to buy a home with no money down. That's right, zero down payment. It isn't even a grant or down payment assistance program that you have to pay back. It is 100% financing. That is zero down payment mortgage. Okay, so now let's get into it. USDA loans are guaranteed by the USDA Rural Development Guaranteed Housing Loan Program, a part of the U.S. Department of Agriculture. Okay, so you might be thinking to yourself, USDA, is this a loan to buy a farm? No, you don't have to buy a farm and raise cattle or plant cotton for this loan. It is, however, a rural area mortgage, so it isn't for a property in downtown or in the big city limits. The property must be in a rural area or non-urban area, and this is determined by the population size. There are two different USDA loan programs. The first one is direct. This loan is issued by the USDA. This mortgage is for low and very low income applicants who can't access a traditional home loan. The other is the USDA guaranteed mortgage issued by a participating local lender like myself, allowing borrowers to qualify for low mortgage interest rates without a down payment. Borrowers don't have to pay for PMI, also known as private mortgage insurance, on this loan. They will, though, have to pay an upfront fee of 1% and an annual fee of 0.35% of the loan balance, which is amortized across monthly payments. This typically costs less than the traditional PMI. Let's look at an example. The 1% guarantee fee can be financed into the loan. So let's say you are buying a home at $300,000. The guarantee fee is 1% or $3,000. Rolled into the loan, our final loan amount would be $303,000. And the annual fee added to your monthly payment is 0.35% or $87.50 per month. Whereas on a conventional loan, the mortgage insurance could be close to $300 per month, depending on the credit score and down payment. Even though the loan is zero down payment, you still need some money as there are closing costs. Some examples are appraisal fee, title fees, survey fee, prepaids, which include insurance and tax escrows. USDA does not allow for escrows to be waived, so we must collect the first year of homeowners insurance premium plus a couple of months' taxes and insurance to start the escrow account. How do you qualify for a USDA guaranteed mortgage? Income limits to qualify for this home loan vary by location and household size, but the borrower's household income cannot exceed 115% of the median income in the county where the house is located. USDA home loans are owner-occupied primary residence only. Borrowers must also be a U.S. citizen or permanent resident. They must have a proven history of dependable income, and you have to have a credit history that demonstrates a reliable ability to repay debt and a score of at least 620 for many lenders. USDA guidelines will go down to 500, but not all lenders will go that low as they have overlays. The applicant can only own one other home that is not within the local commuting area or is uninhabitable. And the property must be a single family only. 2 to 4 family are not eligible. So, what are the pros of the USDA mortgage? Zero down payment, as I mentioned before. Low rates, as it is a government-insured loan. No cash reserves required. No prepayment penalty. If the appraisal comes in higher than purchase price, you can roll your closing costs into the loan. up to the appraised value. And up to 6% seller concessions are allowed. What are the cons of the USDA mortgage? Geographic restrictions, income limits, USDA upfront guarantee fee, USDA annual guarantee fees, primary residence only. You cannot use this loan program for second home or investments. And it can have longer underwriting times. Lastly, non-occupant co-borrowers are not allowed, so no cosigners. Is USDA loan worth it? For the right buyer, absolutely. If you're looking for a zero down payment loan and you're not eligible for a VA loan, and if you have low to moderate income, interested in the eligible geographic area, then it could definitely be worth it. For more mortgage tips, join me on this video where I discuss benefits of homeownership.